Hello, traders. I hope all of you are doing well. Welcome back to Your Nifty Guy. As they say, opportunities don't happen, you create them. And in trading, that's exactly what preparation does for us. Today, the market gave us some very important signals, and I have gone through the charts in detail to highlight the key levels and patterns that we need to watch out for tomorrow. These are not just random moves, but crucial setups that can make all the difference in how we plan our trades. So make sure you stay with me till the end because this breakdown will help you be ready for the next session. And if you are finding value in these daily updates, don't forget to hit the like button, subscribe to the channel, put your thoughts in the comments, as well as share the channel with your trading buddies. And on that note, we'll start with the video analysis. As usual, the video will be divided into two parts. First, we'll be discussing about what happened in the markets today and how did we react to it. And in the second part, we'll be discussing about what we can plan for tomorrow, right? So as I had expected based on the Fed news, uh, I was expecting a gap up opening, as I explained in yesterday's video, that a rate cut is being expected. And in case if uh, Fed Chairman Mr. Powell he announces a rate cut in the US market, that will mean a gap up move for gap up opening for the Indian markets. And I also subsequently told you guys that in case of a gap up opening, majority of the day will can remain sideways, not will, but major of the day can remain sideways, and we will not be getting any intraday moves. But then again, market today was very, very interesting, a very crucial day, a very good looking day, right? Even though it was a complete no trading day for me today, I took zero trades. Now, the reason for the same being that, okay, as I expected the markets to be a bit sideways since the early morning. And as you can see, from the opening till around half day, right? It was around 12:30 till here, market is completely sideways. Now, I had drawn this particular converging triangle wherein I was expecting to trade either the breakout of it or a breakdown from it. Now, the market did eventually break down from this particular level. This was the pullback, and ideally we should have entered around here, right? But I refrained from this particular trade. The reason being the pull down came in after a lot of movement that had already come in, right? And the pullback was a shallow pullback. Now, what do I mean by this? The breakdown happened around these levels, right? After one or two candles, if we had gotten some pullback, maybe retested these levels, not even retesting the trend line, that is perfectly fine. But then if we had got some pullback around these levels, it would have been a good risk to reward trade, right? But the pullback came in much later, around a time period wherein we could also see some buying coming in from below, right? Try to understand the wicks which are coming in from below. So the down move kind of looked exhausted to me. And this really wasn't even a valid pullback. We did not even move back above this candle's high. This were two bars which were inside the 12:45 5 minutes candle in exactly inside. This was basically a sideways consolidation, post which the move did come in at the downside, but as you can see, the move was immediately reversed. So anybody who would have entered this particular trade would have taken an SL or maybe at best got out at cost. Exiting this at in a profitable position would be requiring exceptionally high skills or exceptionally high luck, right? You enter over here and you exit at the same candle around here. That is when you need a lot of good amount of luck. But then again, that is not something. So try to understand and read the charts, right? After being sideways for such a long time, you anticipate a good move, right? Sideways volatility contraction period. So this was the volatility contraction period wherein volatility was slowly and steadily contracting. And when it expands, it should have gone down in a good way. And in a good way, I mean with a logical and valid pullback. But then the market did give us some moves, and at the end where the pullback came in, try to understand, read the price action around here. The down move already looked exhausted, right? Now we did get a breakdown of the same, but I refrained from taking the trade around here. And this was the place around where I was looking at planning a long trade, right? But then again, this high was not taken out around here. This was the place where I was planning a long trade based on a double bottom formation, wherein, yes, confirmed with a good RSI divergence, but then again, markets gave a new low again. And as you can see, markets did form a beautiful 5 minutes, beautiful divergence on the 5 minutes time frame. Right? Markets kept on forming new lows, whereas RSI kept on forming new highs, and the ultimate entry of it all, which came in the good buying, uh, came in around 245. Again, I do not take any fresh entries around that time period. That was the reason I refrained from entering this trade. But I am sure anybody who would have entered any long position at the double bottom uh, concept that we have of taking reversal trades would have minted good money. Some one follower had already messaged me on uh, x.com about the trades that he took, and he was extremely happy with it. And anybody would have taken the trade on a double bottom, right? See, the double bottom confirmation gets pretty much more confirming here, right? Our bias is on the long side, right? Once our bias is on the long side and on an intraday basis, if we get a one-sided fall and that fall is getting arrested, we are forming a base along with RSI divergence. That is something which is a good recipe for a very good trade. Had this trade occurred a little earlier, I would have participated. Again, there are certain rules which I do not violate because I've created those rules for a reason. I do not have any FOMO of missing this good momentum move because I was mentally prepared to not even take any trades today based on a gap up. So once the market moves in a, this is the pattern in which actually Nifty moves when the underlying tone is bullish, wherein market moves in gaps. The trades are taken away in overnight gap ups, and on an intraday basis, you do not get much moves. So I was mentally already prepared, and of course, I was observing the markets. And like I told you, the reason for not taking the short trade around here, again, this is the reason for not entering into the long trade around here. And I have got zero FOMO for this, for not taking this trade. Markets are not going anywhere, and that is what I always try to tell you guys as well. You just need to let these emotions not get the better of you, but you need to control these emotions so that you are at peace and you can trade the following day with much more confidence and clarity and without letting these emotions get the better of you, right? So that was the reason why I did not enter, because 230, 245 I refrained from taking any fresh new trades. But yes, this was a very, very good trade. You are trading in the primary direction of the trend, which is your biasness is on the bullish side. The gap just got filled, right? Try to understand, okay, the market opened the gap up opening, filled the gap, formed a base with RSI divergence, gave us a good W on the charts, and boom. Now, the good thing to observe about today is the daily candle, right? Look at this beauty. Till around 2:30, this candle was right here, right? Where in the opening was around the highs and the closing was near the lows, which looked like a good pullback candle. But then in 45 minutes, the story changed completely from 245. The move which came in formed a good bullish candle, right? Even though the candle is appearing red, many people will say this is negative candle. The closing is lower than the opening. The way I look at price action, this is a extremely, extremely positive candle, right? Because we have tested the lows, we had filled the gaps, and then amazingly, market saw some very good recovery, and we have closed near the day's high. Now, this makes the trading plan for tomorrow again very, very simple. But then again, there are some news coming in of Adani getting cleared in the Hindenburg case, getting a complete clean chit. So that will impact the opening of Adani's stocks tomorrow, which some of them are a part of Nifty 50. Plus, there's a news about US is likely to withdraw the 25% penal tariff on Indian goods by November 30. Apart from that, the reciprocal tariffs can also get reduced from 25% to just 10%. To try to understand the news which is coming in, and there's a resolution which is expected in the next 8 to 10 weeks. Talks are underway. Mr. Trump calling in to wish Mr. Narendra Modi, our Prime Minister, a very happy birthday and everything. So this is all good sentiment, positive news inflow which is coming in, and I am expecting another gap up opening tomorrow. Right, I'll be deleting this. This will be messing up with the charts for tomorrow. Right. So again, I am expecting a good gap up opening tomorrow. In case if we get a minor gap up or we get a flattish opening, we can get a good trade. So again, there's another thing which I wanted to discuss about on the 75 minutes time frame. If you look at the structure is still very, very bullish. Now, all we need to confirm the bullishness is go above this particular high. If we are moving up above this high, we are going higher as per the structure on the 75 minutes time frame, which is a higher high, higher low structure. And if you observe the last swing which was made around here till today's high, we have actually taken the support around the 0.5 to 0.618 zone. Not even once on a 15 minutes time frame did we give a closing below that. This is where we formed the base with RSI divergence after filling the gap and the markets have reversed, right? So why, again, this is something which is a hindsight thing. Even I observed this in my post market analysis which I was doing before recording this video, but then try to understand the levels. Why I'm explaining it to you is to understand the level of higher level time frames as well as the importance of Fibonacci levels, which actually work really well on Nifty if you know how to draw them, right? So on a 75 minutes time frame, this was the last swing. Markets came here. This was the last red candle came in. The low was around created around here. Markets went up to this high, pulled back, beautiful rejection or support from the 0.5 to 0.618 zone, and then we are again headed upwards. So again, I am expecting the markets to be uh, the undertone to remain bullish, and the major plan of the trade for tomorrow will be long trade above this high with the pullback, right? But then again, as I said, in case of a gap up opening, I will be cautious and I will not rush into taking any trades. So yes, this is scenario number one. For any short trades, again, I will wait for markets to come down. If not below, let me also mark a swing or the fib. We can use this as a good reference. And in case if we are heading up, try to understand. I have drawn this particular fib level with this low and this high, which was the last up move which came in from the last low. In case if we create new highs in the morning and then we come down, this fib level needs to be adjusted in the live markets. So any short trade, I will be planning below this, right? I don't even need this for tomorrow. Again, I'm not too keen on for trades on the short side, but in case if we also open with a gap down or minor gap down, we come around these levels. This is again where I'll be planning to go long based on price action, right? So be ready and make sure that you adjust these levels as per the opening or as per the price action in the live markets tomorrow. But then again, this is the basic plan for tomorrow. The undertones remain bullish. My biasness will be on the bullish side. Any trades on the short side, I will be taking them with very, very caution with lower quantities. So yes, I hope the plan of action is clear and how I read the charts. I am able to explain to all of you guys about how I read chart, how I look at the prices while in the live market. So yeah, all right. So that's it for today's market breakdown. Remember, preparation is what turns uncertainty into opportunity, and that's exactly what we aim for every day here. If you enjoyed this video and it helped you plan better for tomorrow, do give it a like, drop your thoughts in the comments, and share it with fellow traders. And if you haven't yet subscribed to Your Nifty Guy, hit that subscribe button so that you never miss the daily update. See you tomorrow with another breakdown. Until then, trade safe and stay disciplined. Cheers, guys.